of contract revenue. When you say contract revenue is measured, contract revenue is measured at the fair market value. Contract revenue is measured at the fair market value. Contract revenue is measured at the fair market value, or the consideration received, or the consideration received, or the consideration received, or the consideration received, or receivable, or the consideration received or receivable. Next point, the measurement of revenue, the measurement of revenue, the measurement of revenue is influenced, the measurement of revenue is influenced by various uncertainties. The measurement of revenue is influenced by various uncertainties. The measurement of revenue is influenced by various uncertainties that depend on the outcome, by various uncertainties that depend on the outcome, of future events, that depend on the outcome of future events. The measurement of contract revenue is influenced by various uncertainties that depend on the outcome of future events. These estimates may need to be revised. These estimates may need to be revised. These estimates may need to be revised. These estimates may need to be revised as events occur. These estimates may need to be revised as events occur. These estimates may need to be revised as events occur. And uncertainties as events occur, and uncertainties are resolved. These estimates may need to be revised as events occur, and uncertainties are resolved. And uncertainties are resolved. Then we look at contract costs. Contract cost. When you say contract costs can be categorized as follows. Contract cost 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 can be categorized as follows. A, costs that are related directly. Costs that are related directly. Costs that are related directly to the specific contract or to a specific contract. Costs that are related directly to a specific contract. Costs that are related directly to a specific contract. B, costs that are attributable to a contract activity. Costs that are attributable to a contract activity. Costs that are attributable to a contract activity in general. Costs that are attributable to a contract activity in general. Costs that are attributable to a contract activity in general. and can be allocated. Costs that are attributable to a contract activity in general and can be allocated to a contract and can be allocated to a contract. And C, such other costs as are specifically chargeable, such other costs as are specifically chargeable, such other costs as are specifically chargeable to a contract, such other costs as are specifically chargeable to a contract under the terms of agreement, such other costs as are specifically chargeable to a contract under the terms of agreement. Then next we look at revenue. Revenue and expense recognition. Revenue and expense recognition. Revenue and expense recognition. Revenue and expense recognition is saying where the outcome of a contract, can be estimated, reliably, the contract revenue and costs, where the outcome of a contract can be estimated reliably, the contract revenue and costs are recognized by reference, where the outcome of a contract can be estimated reliably, the contract revenue and costs are recognized, by reference to the stage of completion. Are recognized by reference to the stage of completion, of a contract activity, by reference to the stage of completion of a contract activity, by reference to the stage of completion of a contract activity. This approach is the percentage of completion. This approach is the percentage of completion method. This approach is the percentage of completion method. The stage of completion of a contract activity, the stage of completion of a contract activity, the stage of completion of a contract activity can be determined. The stage of completion of a contract activity can be determined by formula. The stage of completion of a contract activity can be determined by formula, i.e., A. So you can say cost to date certified, divided by estimated total cost. Multiplied by volume. Value of work certified. Value of work certified, we divide by value of work certified, we divide by the contract price times 100. units completed to date, divide by estimated. Estimated units to be produced the most common are the first two. These are the most commonly used approaches, but again, you never know. When you say the estimated profit, or in brackets loss, the estimated profit, or in brackets loss, the estimated profit, or in brackets loss, of any contract, the estimated profit, or in bracket loss, of any contract can be determined as follows. The estimated profit, or in brackets loss, of any contract can be determined as follows. So you get the contract profit of any contract. You get the contract profit. Maybe some figure here. Lesson cost to date. Certified estimated cost completion for me using any of the three methods. Let's say your percentage of completion. Let's say you have some percent here. Then you say profit recognized. Profit recognized will be that percentage you multiply by the contract profit, and you get the amount to recognize for purposes of tax. There are some two questions I want us to go through now, but I know you don't have them. So I'm trying to get them forwarded. So the fact we're going to look at is May 2012. Mkona May 2012 kweli na clear. May 2012 and December 2012. December 2012 question mark. Both questions are clear. Let me get them forwarded. Question ya mwisho mnayo ni ya 2013. Kama mnaweza kuwa mkonayo ni surprise. Sidhani. 20?
30.
Yes. So there's something that has been forwarded to you. There are two questions there. One of them is May 2012, inaitwa Ujenzi Limited. And then the other question is inaitwa Sakata. Those are the two questions I want us to look at. So tutaanza na Ujenzi, then we can look at Sakata. So Ujenzi is May 2012, I think it's question 2. So I'll read through the question, then we can take a look. So the question reads, Ujenzi Contractors is a firm engaged in the property development business. Somebody's asking a question? So Ujenzi Contractors is a firm engaged in the property development business. During the year ended 31st December 2011, the firm secured 3 construction contracts, namely X, Y, and Z. The firm computes taxable income from the contracts on the basis of the percentage of completion method. The information relating to the 3 contracts is as follows. So contract X, Y, and Z. So contract price, cost of work certified to date, estimated cost of completion. Now, additional information, the total allowable expenses for the 3 contracts amounted to 500,000. The firm allocates expenses on the basis of the contract price. The firm received interest income on housing development bond amounting to 60,000 during the year. The firm also received dividends from investments amounting to 1,360,000 gross. Required determine the following for the year: taxable profit or loss for each contract, and 2, total taxable profit or loss for the firm, and then tax liability, if any, for the firm. So we want to determine those 3 matters. Let me just grab all this. So work out maybe for the first contract X, then I'll let you finish with contract Y and Z. So this is May 2012. And so question, this is question 2A, Roman 1. GNZ contract. So I'll probably show for the first contract X, then we can finish for the remaining contracts. So these are the contracts here. And, so let's start with X. I hope this space will be enough. Then that will do. So this is X. I'll start with X. So those of us who are online, we are using a different class from the one we normally use. So this one, I'm seeing it's telling me like we are running out of time. If it times that as out, you just log in. You just quickly log in, and then we restart it again. It's not the regular class we normally use, so ours imeleta a bit of issues, so we're in a different class, probably just for today. So if we are timed out, please just log in. So I'll start with this one. And you don't need, it's not going to be very big, it's just sufficient. Period. So from our formula, the format we did, we'll start with contract price. So from contract price, the contract price. The contract price is 1.0. They should put thousands of shillings, shillings thousands, and shillings thousands. So we're using shillings thousands. So I'll put contract price. For contract X, the price is 1.2 million. Then we say, lesson, the costs to date certified. The cost certified, I think, is 400 for contract X. So what is certified to date is 400. Then we have estimated cost of completion. So this is what we've done. So this is what we've done. We've deducted the costs of work certified to date, then the full cost of the contract, because we are trying to estimate the cost, the profit or loss. So we've included the cost remaining. Estimated cost of completion of the contract will be 440. So that's the total cost to the end. We put there. Total cost up to the end. Then they also have allowable expenses in note number 1. Allowable expenses. So we also have allowable expenses. Sasa allowable expenses wanasema hivi kwa note number 1. You are told the total allowable expenses for the 3 contracts amounted to 500,000. The firm allocates expenses on the basis of the contract price. So contract price is 1.2. Yeah, Y contract price is 1.8. Yeah, Z contract price is 2 million. So it is on this basis we allocate allowable expenses. So let's allocate for contract X. So for contract X, I'm just giving you this as an example. You'll take the contract price for X is 1.2. We divide by the total. The total will be 1.2 for X, 1.8 for Y, that's 3 million, plus 2 million for Z, that's 5 million. So I divide by the total. It's just proportionate. I'll divide by 5 million. Then I multiply by 500. Now this will give me 120. So that will give me the estimated profit. So the estimated profit in this case will be 240. Then I will look for percentage of completion because they're using percentage of completion method. What's my percentage of completion? Again, for contract X. Percentage of completion for contract X. I will look at cost of work certified. So work certified is 400. The total cost to the end is 840. So cost of work certified is 400. We divide by 840, then I can multiply by 100 first, or I can multiply straight away by the profit. You could have multiplied by 100 first to get a percentage, then use that percent to multiply by the profit, or you can multiply by the profit straight away, and then you get the amount recognized, which would be how much? 114,249. Is thousands of shillings, 2.85. So 114.285. So that is where you end with contract X. So the examiner wanted the profit recognized. Now do the same thing for Y. This would be Y. And then Z.